Cybersecurity is quietly becoming one of the biggest investment themes of the next decade, and most investors are still treating it like the IT guy's problem. That is like hearing your smoke alarm chirp and saying, "Interesting podcast." Global information security spending is projected by Gartner to reach about $213 billion in 2025 and nearly $240 billion in 2026. Translation? Companies are not buying cybersecurity because it sounds cool. They are buying it because the digital world has become a neighborhood where every doorbell camera, cloud app, AI tool, and password named Summer 2024 is a potential crime scene. And if investors understand why this spending keeps rising, they may understand why digital defense is moving from a nice-to-have tech category to a mission-critical business expense. Today, I'll show you why cybersecurity is booming, where the investment opportunity may be, and how to think about it without chasing every shiny stock like a raccoon with a brokerage account. If you are building wealth in your 40s, 50s, or 60s, you cannot ignore where corporate budgets are going. Investment themes usually become powerful when they connect to fear, urgency, and necessity. Cybersecurity checks all three boxes. Fear, because cyber attacks are getting smarter. Urgency, because AI is making scams faster and harder to spot. Necessity, because no CEO wants to explain to customers, regulators, and shareholders that the company's data strategy was basically hope and vibes. Do you want a deeper dive into how to use AI to generate wealth? Get access to checklists, templates, real examples, ready-to-use AI prompts, and free AI agents from the Second Act Investor AI Advisory System. Grab your copy of AI Meets Finance, Investing in the Age of Artificial Intelligence, available on Amazon. Link is in the description. Inside the book, you'll learn how AI can help you research investment ideas faster, organize your financial thinking, build smarter watch lists, and avoid emotional decision-making when the market starts acting like it drank 3 energy drinks and forgot its shoes. If you want practical prompts, plain English frameworks, and a calmer way to use AI as a financial learning tool, this book was built for you. Here's the plan. First, I'll show you why cybersecurity spending is rising. Second, I'll show you the major forces driving the boom, including AI, cloud computing, ransomware, regulation, and digital transformation. Third, I'll show you how investors can think about the theme without betting the retirement account on one company with a cool logo and a conference booth full of free pens. Disclaimer: this content is for educational and entertainment purposes only, and is not financial, legal, or tax advice. Investing involves risk, including loss of principal. Consider your goals, time horizon, and risk tolerance before investing. Speak with a certified financial advisor to help you develop a customized plan. Now let's get back to learning. Picture the modern economy as a giant digital city. Every bank account is a building. Every cloud database is a warehouse. Every mobile app is a side door. Every employee laptop is a window that someone definitely forgot to lock. Cybersecurity is the police department, the alarm system, the insurance policy, the security camera, and the very tired person yelling, "Please stop clicking fake invoice links." The numbers are big because the problem is big. Gartner estimates worldwide end-user spending on information security at $193 billion in 2024, $213 billion in 2025, and roughly $240 billion in 2026. Security software is expected to be the fastest-growing segment, helped by cloud adoption and the risks created by AI and generative AI. Deloitte has also warned that ransomware remains a leading cyber threat, while criminals are using AI-powered tools, deepfakes, and more professionalized attack models. So when people say cybersecurity is hot, they are not talking about a trend that appeared because someone added the word AI to a slide deck. This is spending driven by survival, Companies need to protect customer data, intellectual property, cloud systems, payment networks, healthcare records, factories, power grids, and increasingly, AI systems themselves. But here's where most investors get this wrong. They hear cybersecurity boom and immediately look for one magic stock. That is not investing. That is financial cosplay with a ticker symbol. The real unlock is understanding the demand drivers. If the drivers are structural, the theme may last. If the drivers are temporary, the theme may fade faster than your motivation after buying a treadmill in January. Driver number 1. AI is both the superhero and the villain. AI helps defenders identify patterns, automate detection, and respond faster. But attackers can also use AI to write better phishing emails, create fake voices, build deepfake videos, and scale scams. In other words, AI gave everyone a power tool, including the guy who thinks compliance is a brand of cereal. KPMG reported that 83% of organizations in its 2025 survey saw a rise in cyber attacks, while 99% of security leaders plan to increase cybersecurity budgets over the next 2 to 3 years. That matters because budget growth tells us this is not just an IT issue. It is a boardroom issue. Driver number 2. Cloud computing created more doors to protect. Years ago, a company might have guarded a few internal systems. Today, the average business uses cloud apps, remote work tools, mobile devices, vendors, APIs, identity platforms, and AI services. That is not one castle with one drawbridge. That is a whole neighborhood of tiny castles, each with a teenager using the password 123. Gartner specifically points to cloud migration as a reason security software is growing quickly, including areas like cloud security posture management and cloud access security brokers. As more work moves to the cloud, cybersecurity shifts from optional protection to basic infrastructure. Driver number 3. Ransomware has become a business model. Deloitte's 2025 cyber threat research describes ransomware as a leading threat, with attackers using multi-layered extortion, data theft, leak sites, and specialized criminal networks. These groups are no longer just hackers in dark hoodies. Some operate like companies, except their customer service department sends threats instead of satisfaction surveys. For companies, the math is brutal. Pay for better security now, or potentially pay later through downtime, lost trust, legal costs, regulatory penalties, and reputational damage. That is why cybersecurity spending can be resilient. Even when budgets tighten, digital defense often remains a must-have, because the cost of doing nothing can be enormous. Driver number 4. Regulation is turning cybersecurity into a compliance priority. Companies are under increasing pressure to disclose risks, protect customer data, and prove they are managing cyber exposure. That means cybersecurity is not just a technology purchase. It is part of legal risk, governance, insurance, operations, and investor confidence. Driver number 5. Cybersecurity supports every other major digital theme. AI needs security. Cloud needs security. Fintech needs security. Healthcare data needs security. Smart factories need security. Electric grids need security. Even your smart fridge needs security, because apparently we gave refrigerators Wi-Fi and then acted surprised when the internet got weird. This is why cybersecurity can be viewed as a picks and shovels theme. You do not need to predict the exact winner of every AI race. You can recognize that whoever wins still needs protection. It is hard to build the future if your database is being held hostage by someone named Crypto Viper 9000. Now here's the part nobody talks about. A great theme can still be a terrible investment if you overpay, concentrate too much, or buy it after the hype train has already left the station, circled the block, and started selling souvenir t-shirts. Cybersecurity may have strong long-term demand, but that does not mean every cybersecurity stock will win. Some companies will grow, some will get acquired, some will disappoint. Some will spend aggressively and still not produce attractive shareholder returns. Revenue growth is not the same as investor return. That is a sentence worth tattooing on your brokerage statement. The fix is to treat cybersecurity as a theme, not a lottery ticket. Start with your core portfolio first. Vanguard's investor education emphasizes building around goals, time horizon, risk tolerance, diversification, and regular rebalancing. Vanguard also warns that concentrating in a specific sector can bring higher risk and wider swings, including potentially large losses. So here is a simple framework. 1. Keep your broad market foundation. 2. Decide whether cybersecurity belongs in your satellite allocation, meaning the smaller part of your portfolio used for themes or higher conviction ideas. 3. Diversify within the theme. That may mean researching cybersecurity ETFs, software leaders, identity security companies, cloud security providers, endpoint protection firms, and managed security service providers. 4. Watch valuation. A great company at a ridiculous price can still hurt your portfolio like stepping on a Lego in the dark. For illustration purposes only, here are 3 cybersecurity ETFs ranked by total return over the past 5 years as of July 2026. Source: Weiss Ratings. 1. CIBR, First Trust NASDAQ Cybersecurity ETF, 5-year total return, 98.82%. 2. HACK, Amplify Cybersecurity ETF, 5-year total return, 81.08%. 3. BUG, Global X Cybersecurity ETF, 5-year total return, 40.17%. If you are looking for quick signals, watch 3 things. First, cybersecurity budget growth. Gartner's forecast suggests spending is still moving higher. Second, threat intensity. Deloitte and KPMG both point to rising and evolving cyber threats, especially around AI and ransomware. Third, platform consolidation. Companies may prefer vendors that solve multiple problems instead of buying 14 tools that require 17 dashboards and one employee named Brian who knows how everything works. The motivational part is this. You do not need to become a cybersecurity engineer to understand the investment theme. You just need to understand the economic logic. More digital assets create more attack surfaces. More attack surfaces create more risk. More risk creates more spending. More spending can create opportunities for well-positioned companies. Your job is not to panic. Your job is to learn, compare, diversify, and invest with discipline. Let's recap what you learned. Cybersecurity is becoming a top investment theme because the digital economy keeps expanding, threats are getting more sophisticated, AI is accelerating both attacks and defenses, cloud computing is creating more systems to protect, ransomware remains a major business risk, and regulation is forcing companies to take cyber resilience seriously. You also learned that big spending does not automatically mean every cybersecurity stock is a winner. The smarter approach is to build a diversified core, use themes carefully, manage position sizes, and avoid chasing hype. Cybersecurity may be one of the most important digital defense themes of the decade, but your portfolio still needs a seatbelt, airbags, and a driver who is not texting the market at midnight. If you find this video helpful, make sure to like, share, subscribe, and hit the notification bell to help the channel grow and reach more investors who want to build smarter, calmer portfolios. Do you want a deeper dive into how to build wealth? Get my book, The Wealth Basics, a practical guide to investing and building generational wealth, the stuff we should have learned in high school, available on Amazon. Link is in the description. The book is designed to help everyday investors understand the fundamentals, build confidence, avoid common mistakes, and create a practical plan for long-term wealth. Think of it as the financial class many of us wish we had before we learned algebra, frog dissection, and how to dodge dodgeballs. Continue your investment learning journey by selecting the Investing 101 playlist shown on screen. Keep learning, Keep building, and remember, the goal is not to predict every headline. The goal is to build a portfolio that can survive your emotions, your uncle's stock tips, and the next cyber headline that makes everyone suddenly remember they reused the same password for 10 years. Thanks for watching, and I'll see you in the next one.